Hello, everybody, and welcome to the first FX Lounge event. Today, we're going to be discussing how to be a profitable trader when trading patterns. And I'd just like to welcome everybody and thank everyone for coming out to the first event. And hopefully, you enjoy what you see today and you become part of the FX Lounge community over the next coming weeks and months so that we can all work together to become better at trading. My name is Thomas Atkinson, and I'd like to just introduce myself by saying a little bit about my journey. So I started trading the markets around 10 years ago. Started in stock trading and currency trading, so FX trading. And now I'm still 10 years later, still trading. And I love, and one of my passions is to teach other people how to trade and also to show everybody what I'm seeing in the market. I've also got Tyrone Abella next to me, and he'll be joining me in this discussion today while we're doing the first ever FX Lounge.
Hello everyone and welcome to our first session.
Awesome. So today we're going to be changing up a little bit around what the conventional webinar or conventional things you may have seen in the past. So we're going to try to get away from the webinar style of things, and we're going to go a little bit more into the live charts, telling you what we're thinking about doing and telling you what we're seeing in the charts as well. So firstly, we just need to do the general risk disclaimer. So obviously this presentation and documentation is purely for educational purposes, and the information in this presentation documentation is of a general nature only. It does not take into account your specific needs or circumstances, and then therefore you should look at your own personal situation and requirements before making any financial decisions and seek independent financial advice if necessary. So basically, do not trade the ideas that we're talking about today, because we're only saying what we are going to potentially be doing. It's not financial advice to you guys. So how we're going to cover the FX Lounge from now on is that we're going to be covering theory examples to begin with each week, and when we're talking about ideas, some real examples, so some history examples of how it's worked in the market before, and then we'll be taking a look at a live example in the market right now. So to really cover that, I think that whenever we see, each week we're going to see different patterns, we're going to see different technical analysis tools. So when we see something, we're going to cover that for the week. And we also really like it if other people start sending in their trades and what they're looking at, and then we can do some analysis on those during these sessions so people get their actual questions answered. I'd like to start this week by talking about types of triangles. So we have symmetrical triangles, ascending triangles, and descending triangles. Now, many people will be familiar with these, but people that are not familiar with these are just a type of pattern that we can use when we look at trading the markets. So we're going to focus on ascending triangles right now today. This is because I found a few really good ascending triangles on the larger time frames in the live markets, and I want to discuss the theory behind trading them and then look at what we might be doing over the next coming weeks with these trades. So an ascending triangle is formed by a flat resistance line and an ascending support line. It's a bullish pattern, and in most cases a breakout will occur to the upside. So this is what an ascending triangle will ideally look like. So if we were seeing it on a line chart, it would look similar to this. We've got that resistance level up the top, or a point where the market can't make any higher, and then we've got a slowly increasing lows, so slightly higher lows each time it hits and comes off this period up here. And what we're looking for with an ascending triangle is a breakout above. So of course, with ascending triangles, they won't always ideally look like this. A more realistic example would be something like what we're seeing here, where we've got this line chart. It's a little bit more choppy. It doesn't fill this line out as well, but it still serves the same purpose. So as technical analyst traders, we always should be looking for patterns, but we may not always be able to see perfect textbook patterns. You'll have to take what you can get in the market, I guess.
Absolutely, and on the line chart, the way it looks at the moment, even though It's making lower highs and higher lows early on there before it does its first touch. You can see the general pattern starting to form, and it is starting to fill a little bit of the white space behind the pattern. So what we're looking for here is the overall filling of the resistance and the support line rising. So we're basically getting higher lows. Even though we're not making extreme new highs, we are getting the higher lows, which is actually forming a price pattern that's starting to trend up. So we're looking for that break. And if you bring this back to a candle pattern, I think it'll make a little bit more sense.
Yeah, we'll cover candles in a couple of minutes. One thing I just like to do when I'm drawing these, I always like to look for at least two high points. So I'd like to see a high here with two lines or like low points. So a low with a higher low. So at the point where it's done these two here and these two here, I'll be drawing up my pattern with the idea of price becoming compressed in this zone and then hopefully breaking out to the long and for us to potentially buy into the market, whatever this pair may be. So I'd just like to look at the trading strategy behind an ascending triangle, and I've just prepared a couple of slides to go through for the theory. We've got a look out for the breakout to the upside. So obviously we're looking for a breakout to the upside. Then we've got the confirms breakout. Now this is the point I'd like to focus on. I'm sure Tyrone would as well. When trading, always look for confirmation of a pattern or any kind of trend before entering. I think a lot of people get caught out by not necessarily seeing that confirmation and entering early, and I'm sure a lot of people in the room today will be able to relate back to that. So what we're looking for is we're looking for that confirmation close, and that means that if we were doing the analysis on this chart on a 1 hour time frame, and this was all 1 hour lines coming up and down, until the 1 hour line closed above this zone, so we'd want to see a close of that 1 hour, we wouldn't look to enter the market. And that the main reason behind that is because once something's closed, nothing can take away how that looks visually in the market. Really important, I guess, lesson that I had to learn, and I know Tyrone had to learn as well. So always wait for that confirmation before buying in.
Absolutely, and these sorts of patterns really lend themselves to fake breakouts, and it does happen a lot, especially in the currency market. So you'll find that price will make a new high within the period that you're trading, and then all of a sudden it will just reject straight back down and potentially go and test the lows that are making it. So what we're trying to do is look for that confirmation. If we do get a close, and we also have to be mindful that different patterns on different time frames close at different times. So we do have, if you're looking at a 4 hour chart, it may not be consistent with every 4 hour chart, in the world. So it's ideal to use the bigger time frames in these patterns, but sometimes look for the confirmation, especially on a 4 or a 1 hour chart, that it does close above it and take that break.
Yeah. So how we'd be looking at trading something like this is we'd buy on the confirmation, and then we'd need to be able to project our target or our take profit area and also our stop loss. Now the beauty of trading patterns, if no one's ever traded patterns here before, is that we always will know an approximation of our take profit areas and our stop loss areas. So here in this ascending triangle, I like to take 2/3 of the maximum height of the triangle. You'll find a lot of different information online, but I find that 2/3 works the best in all of my back testing and live testing results. So 2/3 of the maximum height, so around this point here, and then what we can do is we can project that out as of the break as our profit target level. So one thing with trading is entering is easy, but figuring out your take profit and figuring out your stop loss and risk management is generally the hard part. So we place our take profit at this 2/3 point above, and we'd be able to place our stop loss below the last swing. So with an ascending triangle, it's quite easy to see that swing because it would be the last low point before the break, and it would be very obvious, and we'll look at some other examples soon on this.
Sure, and one thing you'll notice about ascending triangles, and or any triangle for that matter, is that price obviously is moving towards the apex. So what we're looking for, the ideal breaks usually happen 2/3 to probably 3/4 of the way through the pattern. So if we're looking at here being maybe the halfway point, it's probably somewhere between this area here that we'd actually be looking for the break. So a break any earlier or a break closer to the halfway point isn't probably as significant and doesn't really make the pattern as strong as you would like it. But after the pattern has formed and we've identified it by the two touches on the resistance and the support rising line, we can start looking for that break, because we have some dimensions for the triangle. So anywhere between the 2/3 to 3/4 mark, we're looking for that break. It is very rare that the triangle would continue on and go all the way to the apex and break from this end. Once price reaches here, more than likely the pattern will just fade out. So we're definitely wanting the break around here.
Cool. So I've got here just an ascending triangle example. So we've got this chart and it's been going up slowly over time. And the good thing about this ascending triangle is it's in the direction of the overall trend, which of course they're saying trend is your friend. So trading with trend is always good. But you can see how we've drawn it, and what Tyrone was saying before was that we've got this series of resistance lines, or the high of our triangle, and we've got our low and the low points there making it higher, but we haven't actually reached that apex. So we've broken it before that, and that can happen quite a lot. So a lot of the time you'll see this particular candle here that I'm highlighting is the one that we would be looking at entering the market into. So you can see it's closed. So the candle has actually closed higher than our previous lines right here, and it's given us the confirmation that we should enter the market. So we would buy here with the idea of taking profits at this 2/3 point. So that would mean that we'd take profit around this point. Now it's important as traders as well that we don't get carried away with the idea that yes, it went further. I like this example because you can see how psychologically this zone actually ended up becoming a support zone later on. And that's because we got it correct, because the pattern showed us and the market showed us where to place our buy and where to place our take profit level. So if we were trading this, we would have placed our stop loss below that last swing here, and it would have been around a 1-to-1 trade. But they can get up to 3-to-1 or even 4-to-1 trades. So very, very good. And the confirmation is that when it came back up here, up to the high, and came back down, there was some consolidation at this point, right where we took profit, which was probably because the market saw that as a potential support zone, along with many other things. So I've actually got a live example of an ascending triangle in the market, and we'll go straight into the Pepperstone MetaTrader 4 platform, and we'll take a look at this live example. So I'll just go over to XBR USD. So a lot of people are probably wondering what that is. It's crude oil Brent. So a lot of people are talking about what's going to happen with crude oil and Brent crude oil over the next coming weeks, months, years. It's at very, very low point. And if we go back to a weekly chart, we can see of the data we've got here, it's just been continuously coming down, hit that $27 low, and now we're sitting around 36. So very interesting times there. Now I've drawn up this ascending triangle so we can see that we've got our high point, then it's come down, it's hit this low, and we've already got a low here, then it's come back, touched that high point, come back down, and again it's seen this level as a point of support. So people are buying here with the idea of taking it back in. So it's actually formed an ascending triangle, and it may have looked like it's broken here, but it's an interesting one, and this is why things aren't always perfect from theory. So from my experience trading in the market, I personally wouldn't be actually buying it just yet, even though it's looked like it's broken here and here and done that confirmation. And it's because of this candle here. So if we zoom in on this candle, we can see what a shooting star, almost, not perfect, but a pretty close to perfect shooting star candle on the daily chart. And what this means is that price moved up throughout the day and buyers were in control of Brent or crude oil. And then during sometime in that day, sellers came back in and sold it strongly down back into the top end of our triangle. So this could have been our break. And if we'd entered early, we may have got in here and been down at this point and been pretty worried actually. So this rejection is quite a strong candle pattern. And what I'd be looking for is not only would I want it now to break out above, but I'd want it to break to a new high. So So I'd want to see a break above this point and a close, and then I'd be looking at longing or buying into crude oil.
Absolutely. And when we look back and we see this is the daily chart, so we're looking over here. We've got nearly 2 weeks of pretty solid support and resistance, making a little mini channel here as well. So it just so happens that if we put our crosshairs on here, we need to break out of this, basically have a close above our shooting star here, which is not very far away. Like it is, it's certainly possible. It could even do it tonight. But even when it does that, we know that we've still got a little bit of resistance in front of us. So will it break this level? Potentially. But if it does, our take profit will be very consistent to where we've marked our triangle here, which is probably somewhere in the vicinity of here, which will be almost, as you can see on the crosshair, another place of resistance and support. So
I'll actually draw that now. Let's draw that together so we can see this 2/3 point. So around here is our 2/3 point. If we projected that out and then we drew just another horizontal line, you'll see exactly what Tyrone was talking about. Look how the market's predicting through this pattern that if this does break high, we'd be looking at going back into that $42 area. And the $42 area was previously a potential support zone. So this would be absolutely where we'd want to take our profit.
Absolutely. And even though the ascending triangle is giving us that profit target, even if we were trading this break, we would probably be looking at this target regardless, just purely because of the previous support that it did find there before it eventually broke through. Now, of course, we're going to be very mindful that oil has a lot of other factors apart from technical analysis that's driving it at the moment. So it does have a lot of fundamental and economical factors that are driving it. But all we can trade is the patterns that we see. And the indications that we're getting here is it could potentially be breaking to the upside, and a significant break at that.
Yeah, so nice amount of potential profit here if it does break, but this is a very interesting one where market experience and also recognizing other patterns within a pattern can help you to potentially stay away from this zone, because I wouldn't be considering this a strong break until it breaks above that high. If we did buy into this, we'd be looking at buying on that break with a stop below that last swing. So just a stop just below here. So I'll just mark that for everybody so they can see it. Somewhere around this point here would be a great point to have your stop. And if it was going to be unsuccessful, it would definitely take out this stop, but this will keep you safe. So always work out a very safe visual stop point is very good, and then you'll be able to effectively trade this for what could be potentially a 2-to-1 trade.
The good thing about symmetrical triangles and ascending triangles is that the closer the break is to the apex, being the 2/3 to 3/4 zone, the smaller your stop loss has to be. So if it breaks at the halfway point, you've got a pretty big stop loss, which is nearly a 1-to-1 trade. But as you can see, this one is well within the 3/4 of the break, which means that your take profit target is going to be nearly 2-to-1 on your stop loss, which is quite an acceptable trade.
For all the sellers out there as well, because there's going to be people interested in selling down Brent or crude oil, if this doesn't happen and let's say it does come back down, this particular trend line or the bottom of this ascending triangle, if this does break and there's a confirmation close below this line, we could always be looking at selling crude at that point, and then I would be looking at potentially the bottom end of where it reached recently. So you'd be taking that kind of 2/3 again, you'd be projecting that out, and if it's say broke around here, you can see that again it's predicting that. So right now we have nothing to do, but if it broke above, we could be looking at buys, and if it broke below, we could be looking at sells. So there's a lot of different opportunities, and we don't need to be jumping into this market. I've also got another interesting one for everybody, and it's another commodity. It's gold. So right now, gold has been steadily increasing as the stock markets and the volatility has increased across all of the world. So gold's always been seen as one of those hedging kind of assets. So people buy into gold to get out of the US dollar or get out of the stock market, and it's considered safe. So we've got this strong downtrend, but we can see that in recent times, since this volatility has increased, gold has actually managed to break out past the last level of potential support and resistance, so past this level here, and it's made a new high. Now, if we drill down into it a little bit and go down to a 4-hour chart, I'm sure people are starting to see what I'm going to talk about. We've actually got another ascending triangle here. So it's really interesting. There's a few of them going on in the market. And again, it's a very nice one, this one. We've got several touches to the bottom end of the trend line. And then we've got also several touches to the resistance zone. So because these are just wicks, or they're points that the market did go to, but then they've strongly rejected, I'd be drawing it around the body. And what some people like to do with patterns is they'll change to a line chart and they'll draw it on a line chart because you can see how clear it is. It cuts out a lot of the noise that we're seeing when it comes to a candle chart. So if you just use candle charts, consider using line charts and bar charts because they can be better for drawing patterns.
Yeah, and quite often when you do revert back to a line chart, then when you do put the candle chart overlay over the top, it actually makes a little bit more sense and you understand that the wicks, especially the high ones, were just basically the market reacting to noise and then coming back to the real pattern. And with this particular ascending triangle on gold, as you can see, it's also with the new emerging trend in gold going up. So you are trading again in the direction of the trend, which is of course our preferred trading methodology.
Definitely. I got caught into that one when I was first started. I always like to get better price, and because I want to get better price, I got the mentality that I would buy against trend, and because I'd get down the bottom the best price, I'd profit even more, I guess.
And it is amazing that people seem to consistently want to trade against the trend. It's almost like they've got a point to prove. We quickly found out very early on.
I call it the market fight.
Yeah,
you want to fight the
fight.
hedge funds and fight the superannuation funds. And
but I think if we've learned anything in our combined 20 years of trading, is that it's a lot easier to swim with the trend. Obviously, you're going to swim upstream. It's going to be a lot harder. So swim downstream, just like trading downstream.
You don't want to be the salmon.
Absolutely.
I guess that's a good one. So with this, another thing I think that's worth noting, I was talking to Tyrone before doing the show today about this, is that this particular ascending triangle is actually moving straight into, and it's projecting, that 2/3 projecting into the 1300 area. So just 1295 here, but if I zoomed in and drew it a little bit better, I'm pretty sure it'll be right around that $1,300 zone. So that's a very big psychological zone. If we go back out to those bigger time frames, we'll see it was also the previous high before it started and resumed its selling point. So great take profit level, and again the pattern has shown us this. So really, really awesome. I think it's why I do most of my pattern trading. I really like it. I find it amazing that the market is showing us where to take profits, and that we can consider complete areas as just this is all going to be bullish or bearish in that zone.
Absolutely. And just with the pattern trading, it just does take a lot of the guesswork out of where you're going to put your take profits and stop losses. If you've got defined stop losses and take profits, it just makes the job of trading just that little bit easier. Okay, so you're not really guessing where you think the market may or may not go. You're following structured rules, and if it works out, that's great, and if it doesn't, well, that's trading. But at least you know that if you have followed the rules correctly, you've given yourself every chance that it's going to work out.
I've just got actually a question from Joey. Joey asked, where would I place a stop? So I place a stop below the last swing, which is right here. So I'll just line that up for you, Joey. Just here, I'd place the stop. So again, 2-to-1 looking trade. And he also asked, if it was 1300, would you take it slightly earlier? And yes, I would. Whenever it comes to a psychological level, I always relate it back to a stock because I think it's the easiest way. If a stock on the stock market is reaching $100 for the first time, it's a very big psychological level, and many people are going to want to take profit at that level and close their orders because we like, as humans, round numbers. So very big psychological level, and therefore, as a more experienced trader, I'd be taking my profits slightly earlier because you'd be surprised how many times a stock will get to $99.80 and how much volume or how many people will be waiting to sell it at $100, and it will just never reach there, and then all of a sudden 3 days later it's at $90. So if I was taking this particular trade long and it gave us that confirmation, I'd put my take profit probably around this 12.95, maybe even the 12.99 kind of area, but I would take it at least $1 before the $1,300 zone. And that's just because psychologically there's a lot of people probably with 1,300, and people that are trading the market can see those volumes, and they may not push it to that point. They may just stop it just before and then sell it down. So 80% usually of whatever you're projecting is a great rule of thumb.
Yeah, and at the very least, even if you still have a big conviction that it's going to reach that level or potentially break it, it would be even if you just take a little bit of profit away and leave some of the trade on and tighten your stop loss, because at that point you certainly want to be bringing your stop loss well above your entry point and a lot closer to the price action. So if it does fail to continue on the whole 100% move or greater, at least you're not going to take anywhere near the loss that you would have, and you would be taking away some profit. So you need to make decisions at the 80% mark on what you're going to do, but at the very least, you lock some profit in and move the stop loss up.
Cool. So we've covered 2 ascending triangles that are in the market right now, but there's a couple of other ones I'd like to look at. So that is how to draw a trend line efficiently and effectively. And we have a live example again, so we'll check out how to do it first, and then we'll have a look at that example. So here we have a trend line in an upward trend. So we can see that price steadily making a series of new highs with a series of higher lows, so higher low points. Now, if we draw a line across these higher low points, we can draw what's called a trend line. A lot of people just draw trend lines, and they'll just draw them willy-nilly, and they won't actually have a hard and fast rule for why you've got to draw a trend line. So I thought we'd go through that quickly. If we have this trend line going up, at what point does it become a trend line? So the point that we have, and also is generally known through all of the professional kind of field, the fund managers and everybody else, is that after the second hit, or the second touch here, the third touch here is what we're looking for, be looking for a break to a new high, and then we would be potentially drawing this line and looking at buying into the trend line.
Once that point is reached, so we've got the this is our second peak with our third higher trough. Once we've broken that second peak, we've got a valid trend line. Okay, so what we're looking for here, so we've got our low, we've got our high, we've got a higher low and a higher high. Once we get the next higher low on this support rising line, once we break this peak, we're off. We've basically got a valid trend line. Even if the market happens to come down and touch this line again, to me that would be even a stronger area to buy than taking the break, because what we've got now is a new place of support which matches up with this peak here, and you would imagine and expect that this trend line is going to hold, and not only hold, probably project the price a fair bit higher than the new peak. So we've definitely got a valid trend line.
Yes, so this will validate the overall trend as well that we're going into. So once we draw it, we'll look at that break of the second high here, and then we'll draw our line, and then we'll be able to continuously buy all the way up every time it hits this line until the trend is, of course, exhausted or stops or breaks down. So very, very clear there on how to do it. So trend line's a dynamic support line. For obvious reasons, it's going up on an angle instead of just being flat. And then we'd be looking at doing this and buying into these pullbacks for the entirety of the trend. So again, we've got a couple of live examples of some of these trend lines at the moment. So let's go back to the charts and take a look. So many people here will be from Australia, I believe. A few people saying, yep, definitely from Australia. So the Australian dollar is what a lot of Australians like to look at for obvious reasons, going overseas, exchange rates, all sorts of things to do with that. But also, you're usually more interested in your currency. So that whatever country you're living in, you'll generally look at your currency a little bit more than the other ones. So for the Australian traders out there, we've got I guess you could say, imperfect kind of channel here. So we've drawn this top end line, and we've got our trend line down the bottom, and the trend line's just been validated. So what I mean by that is, let's go back to a line chart's not bad, but we'll just quickly draw it like this. So let's go back to that line chart. So we've got our high, then we've got our retest. We'll go back to here because it retests it, and then it's got a new high, and then it retests it, and then it's just broken past that new high. So this particular line that I'm drawing, and I'll draw it down near the wicks here, so the lowest points, is now validated. So that means that every time it comes back into this trend line, I'd be looking at potentially buying into the Australian dollar.
Absolutely, and if we look at where that level would be, if it did happen to come down now, we'll just pop our crosshairs on it right there. As you can see, it's another previous place of support and resistance, which you would expect the pattern would form there, probably be buying somewhere around here, and off we go again. So we're always looking for extra signs or signals, if you like, to actually enter the market. But when we get a valid trend line, which this one is now, we are looking for that retest of the line. And if we do buy down here, we're also looking at other places that could offer support if we intend to do that. As you can see here, we've had support around this area here. It was resistance here, again resistance here. So it would be a very solid buying zone, which is around probably the 72.80 to 72.50 mark.
Yeah, around there. And it's good to have zones as well, like having little zone areas when you're looking at the bigger time frames. It's good to have different areas where you can buy in, and that goes for 5-minute and 15-minute scalpers as well that are probably in here. So how you trade it, I personally would be looking for a pullback. It'll probably go up to this top end of the line, then it may consolidate for a little bit because we're coming into that strong kind of resistance area here. And if it goes up to there, which will be the top of our line, then we would wait for it to either pull back into this point, which would probably be the bottom of our trend line. So we're just looking at some options so that we can come back at another point, check out the market and see what's happening there. But overall, that's what I'd be considering. The other thing, and a lot of people are going to be saying this, is that the Australian dollar is in a massive bearish market at the moment. So overall, there's more sellers than buyers, and the commitment of the sellers has been going on now for a couple of years. So we used to be over 1-to-1 with the US dollar, and now we're sitting at about 73 cents per US dollar. And the main reason for all of this is because of the Reserve Bank of Australia. So whenever I'm generally talking about technical analysis, but whenever we're talking about fundamental analysis, it's important to know what the Reserve Bank or the central bank of whatever currency you're trading is doing. So the central bank in Australia, as many of people are aware, is been consistently lowering interest rates over the last 2 years. And by lowering interest rates, they're basically depreciating our currency towards the US dollar in particular. So every time they lower interest rates, that's generally what will happen. And as long as the Reserve Bank of Australia is happy with it, or saying that they want to continuously lower interest rates, or they're concerned about the dollar being so high, when you hear those things, it should send off alarm bells, and you should say, well, from now on, I'm looking at only one direction of trade. So I might only be looking for shorts or sells in the Australian dollar.
Absolutely, and as much as technical analysis gives us a lot of insight into what is happening in the market short term, we would be foolish to ignore what fundamental analysis can give us. And what we've found in the past, and as history would show us, is what the central or Reserve Bank wants, it usually gets. It has a very big arsenal of tools that it can use to force a currency to get to where it needs to get to for the good of the country. So when it is stipulating that it wants a lower Aussie dollar and the Aussie dollar is at parity with the US dollar, there's a very good chance they're going to get what they want. So what we'd be doing in that instance is taking all the shorts available to us, knowing that we are trading in the, not only in the direction of the trend, but most importantly in the direction that the Reserve Bank wants the currency to go.
Yeah, so if you weren't prepared to do buying on the bottom of this technical trend line, then another thing we could be doing is I've drawn this tentative top end kind of line. It's really drawn just because of the amount of touches between these zones, and I've averaged it out a little bit. On a line chart, you could bring it down to that kind of middle point. But if it did come back to this resistance point, it may be near the top of our channel. And the reason why I'd be looking at selling it there is the overall trend. So for anybody that's looking at selling, that would be an excellent zone to have at least a shot at entering the market, and you'd place your stops just above the previous high wicks. So just here would be where you'd put it.
Absolutely, and as you could probably all well imagine, there would be a lot of very eager beavers looking to sell at that point right there. I'm sure there's a lot of selling orders sitting right in between that channel that Thomas has just drawn. So that is what you're going to have to contend with if you are long. So even in the shorter term, it would take a monumental move to break that zone without serious resistance.
And that just comes back to news. Be aware of what news is coming out. So when it comes to this point, is there important news for the Australian dollar or the US dollar in that week that could technically push it past this zone? Because generally, if it's just coming in from a technical reason, this will be a very good sell zone, and we could look to sell it into our trend line, or you could take it back into the lows. But I, as a technical trader, would probably be selling it here. I'd take half of my order off on the trend line. I would then break even the rest of my order. So I'd place 2 orders. Let's say I was trading 1 contract. I'd take 0.5 and 0.5. I'd take half of my order off on the bottom of the trend line, and then I would leave the other half broken even, so completely even on that trade, and I'd leave that probably into the last lows or the support line down here. And when I draw support, generally I'll be looking at a line chart. So I'll always be looking at the average kind of price, and I like to have that average zone. I find that's a little bit better, and that comes back to that 80% rule again. So that's the Australian dollar, and a lot of people asking about the euro dollar as well. So we'll go over to the euro dollar, and it's not any kind of trend line at the moment or ascending triangle, though there was one recently. So you can see here on the bigger time frame, we actually had the beginnings of an ascending triangle that was unable to break higher. And coming back to that confirmation, if we're seeing the ascending triangle on the weekly chart, and that's where it's most clear, see how it did break out to the high, but then by the end of that week, it actually closed underneath inside our pattern. So that's where that confirmation comes in. And if we zoom in here a little bit, we'll see that it just wasn't able to hold above this. And at this point, we definitely would have been drawing this ascending triangle. So it's a bit of a trader's trap, I guess, and that's why confirmation's so key. But as it's broken out and gone down, it's come back, retested this area, and of course, if we were trading it with the 2/3 rule to the break to the low, which you can do, we'd be looking at, we would have looked at probably taking it into probably these bottoms. So we would have sold down into the bottoms. We'd now be out of this trade, and I guess you could say that we're we don't really know where it's going to be going right now, based on the weekly chart anyway.
And that take profit would have been well within the 80% zone that we were talking about of your projected take profit. And that's why it's so important that you're sensible about your take profits, in that you do take some evasive action when it does reach the 80% zone, because those targets on patterns are there for a reason. It's not just something we're making up. A lot of the world is looking at the exact same thing. So it stands to reason that people are looking at the same take profit and stop losses.
Yeah, so when strong areas are broken, if we were drawing lines here and we're drawing kind of like a channel in between these lines, you can see that when price breaks out and breaks above those highs, it's very, very strong overall. So Tyrone's just mentioning that if you draw this particular line here as well, you can see that this was what he would call a symmetrical triangle coming in. We won't cover that today, but there was a symmetrical triangle. So there's a lot of patterns everywhere, a lot of different opportunities, and the way you do a symmetrical triangle is you'd also take that 2/3 point, and then you would project that out. Let me just grab that. And then we would take profit at this zone. So back into, it all works out, and this is how patterns are. They'll always end up working out with what everybody else is seeing in the market. So you can see that's our high kind of point. This would be already the point that we'd be looking at selling into the market. It turns out to be our take profit zone based on our symmetrical triangle. So overall, there's a lot of different trades we could have been doing on the euro recently. And
Yeah, and what we mean by always working out, of course, we're referring to the ones that actually do break out. We're not saying that this pattern works every single time, of course. It's just that when it does, its chances of actually hitting the projected target or staying within the stop loss that you've applied according to the pattern, there's a very, very good chance that will happen. Very rarely do they break to the right side and not actually get very close to the take profit.
So I've just got Dane in the chat room. He's asked just to have a look at the Oz 200, which I actually did have up. You must have seen it down the bottom. So he's asked me why I've got that down there and what my thoughts are on the stock market, I guess you could say, or the ASX. So Pepperstone does have all of the indices, or the main indices, to trade, which is awesome. It's the futures market and spot, which is really, really great. So here is something I prepared earlier that we were just talking about today because of the confirmation close. So some people will be familiar with this, but we're seeing a potential head and shoulders pattern here where we've got I'll change it to a line chart so we can see a little bit easier. We've got our left shoulder, our head, and our right shoulder. And you can see that the actual market has closed, or the futures market is probably going to close today with a confirmed break above the neckline, or above this zone here. So here's our neckline, and it looks like it's going to break above. So with like any of the patterns, you are given a very easy take profit because you can take the length of the head, you can then project that out, and funnily enough, it comes back into the previous resistance zone. So that 53 kind of 50 area. So it's just another one that if this confirms, and I wouldn't be entering it now, but if this does confirm and break higher, there's a good chance that it will go to this point, and that's where I'll be placing my take profit. And in terms of stop, Dane, I'd be looking at placing it below the right shoulder. So for this particular pattern, you place it here, and then you take profit as the head distance.
This particular inverse head and shoulders has got very deep shoulders, so the profit and loss ratio isn't as great. It's probably around the 1-to-1.
Just a little bit over 1-to-1.
But in saying that, it's a fairly solid pattern, and as you can see, as with most good patterns, the take profits actually end up in a zone where you would probably expect people would be taking profit anyway, or at least starting to reverse and short. So as we can see, where the take profit is projected on this inverse head and shoulders is a previous place of resistance, which, if you look a little bit earlier, was also nearly support. So I mean, if we take this down, I mean, we're always talking about zones, okay? We're never going to look at just a particular number, because very rarely is the market perfect. But yeah, when we do take it out, you can see that that previous area was definitely support and resistance previously, and it would be a very logical place to take profit on this inverse head and shoulders, even without the head and shoulders telling us that would be the place.
Yeah, so this is some of the most exciting stuff that I find in trading. I just love patterns. I love how they work out, and I love the psychology behind them. So today, that'll be all that we're really covering in terms of the live market, but I'll just go back to the slides for a second here. But I'd just like to say a thank you to everybody that did attend, and I'd also like to thank everyone that's managed to go into the chat room and ask us some questions and ask us what they're already looking at. So over the next coming weeks, if it's possible, people can feel free to send us emails. It's just trades@thefxlounge.com. So if you send us any emails, that would be excellent. And we'd love to spend the last 15-20 minutes analyzing your trades and taking a look at how you've traded, how you've taken profit and put your stop loss in, and also what your currency you might be looking at is. And that will keep it diverse and also keep it really interesting. So thanks to everybody coming out, and we look forward to seeing you next week.
Thanks again, and thank you for joining the community.
Great. See you guys.